Okay, welcome back Mega World team. Thanks for tuning into today's video. Let's go ahead and dive into the charts today. We're going to be doing a technical analysis on the current price action on the short term, as well as taking a look at the macro and even the small time frame to discuss what we think is going to happen with the price and where we think the price is headed. If you're new to the channel, welcome. It's great to have you here. Consider subscribing, liking, sharing the video. If you are a subscriber and want to support us, head down, click the link to Bitget, join Bitget and trade where we trade, or click the link to our Telegram channel and access all of our charts analysis videos, updates, and much more. All of that can be found in the pinned comment down below. Let's go ahead and dive right into the video. So Bitcoin is in quite an odd pattern. And the reason I say that is because we did see if you remember back to our video a few days ago, we had our symmetrical triangle formation, which was this pattern here. And we broke to the upside of that symmetrical triangle formation, developing a new pattern, which was our rising channel. Now, rising channels are bearish structures. We do expect breakdowns from these structures. We actually did see a break to the downside, but it wasn't a sustained break. We found a lot of support in this horizontal range with these two green lines. And we'll come back and talk about these horizontal levels in a second. But we bounced quite strong from there. Since then, we have developed a falling flag, so a bull flag or a descending channel. Now, we have had a fake out to the downside as well as a fake out to the upside. Now, if we eliminate these two moves, we can see very clearly we are still within this descending channel. So this means we do expect a break upwards on the shorter time frame of this channel, of this flag, you could say, in the next few days or even next 24 hours. So the trigger for that move will of course be that downward sloping resistance, which lines up to about that 19,471 range, which is of course a horizontal resistance range we have seen act as a resistance a few times throughout the price action in the last 2 or 3 weeks. So what are the measured moves, or what are the targets if we do break out? So we have two targets. The first one is taken from the bottom of the flagpole, and we can go ahead and copy that one over, and that will be from the breakout point. And the second one is from the first initial resistance to the first initial retest of that channel, which is here. So our targets are as follows: 20,000 and 20,600. Now we already know that measured moves do not give us exact targets. They give us ranges of which the price action can move between until it meets the next major resistance. So we can see both of these measured moves take us to this major resistance, meaning that we do expect a retracement or a push through here. If we push through, we reckon this will be eliminated. We will push up to this range and get rejected within this range. Now, if we do break through this range, of course, this takes us up to an upper target, which we're not going to talk about today, but we'll talk about in maybe the next video if this flag does break upwards. So taking a look at this bull flag, it is looking quite good. There is a lot of upward potential from this bull flag. The downward potential is as well. There is a lot of downward potential, but, and here's the big but, the risk reward on this long over here is more favorable, okay? Because we have a 6.14% potential move upwards. And even if we go to a more, would say conservative move, 4.4%, and the downward risk right now from here is no more than 1.5%, maybe 1.2%. So the risk return right now on longs are more favorable. We are near our major uptrending support, and the major uptrending support is of course this bull flag support line, which we can see drawn across over here. We've had numerous retests. There's one here, 1, 2, 3, 4, 5, 6, and we're almost coming up on the 7th. So we've had numerous retests of this support line, and therefore it is a strong support line. We do have this nice sideways and downwards consolidation above this trend line. We have a horizontal support over here. We do have a little bit of a pinch. We have a bit of a pinch over here. We break through a pinch. We will push upwards to this range at least, potentially find a little bit of support, come down and push back up into this range, or reject from there, okay? So that is what we're looking on the short term for the bullish move. For the bearish move, what we're looking for is a break down from this green line, down from this uptrending support line, and of course we will need to lose this level. I'm not looking to short until we lose this level. If we lose this level, we're looking for low entry or low capital shorts. The biggest downward move will occur if we lose this level. Okay, if we lose this trigger line, that is when we're heading back down to 17,600. And for those of you who pay attention, 17,600 is of course this green line over here is absolute low. So we are not looking for big shorts until that plays out. Until we lose this level, we should be more optimistic than bearish. Okay, Let's go ahead to a slightly larger time frame, and we're going to talk about this chart over here. So we have these lines going on, and if you imagine these lines as like a target, so essentially we have this target zone over here, then we have resistance support range over here, resistance support range over here, and then we have a time date support range over here, or resistance range essentially. Okay, so what we're looking at over here is we're looking between these levels here. We have major resistance. This is a major resistance zone. If we zoom back, which we can do in a second, this is the major resistance zone between the dates of December 2020, I think it's the 20th of December 2020 and late December 2020. We acted in a lot of resistance within this range during that period. When we broke through there, we went quite parabolic. We went into that first leg of the bull market. Now, I'm definitely not saying if we break through this, we're going to a bull market. Not what I'm saying. But what it is indicating that when we do break through this resistance range, we have a very low volume we have a very historically low volume trading range right above this level. So the move upwards above this level, above 24,000, should be a very easy move upward in comparison to the move upward from here to 22,000, 23,000. Okay, so we're looking for longs above that level. Of course, we do expect a push upwards to 28k if we do clear that level. Now, looking on the downside, we have this lower range pushing downwards, as you can see on the screen over here. The reason why we have this indicated is because if you look at where this horizontal support range between 19,000 and the absolute bottom, okay, lines up with this downward sloping trend line. And this downward sloping trend line is in fact our wedge formation of the bear market. This is our wedge. Now, when we break through this downward sloping trend line, we enter a bear market rally. When we break through this downward sloping descending trend line, which is this one over here, we exit the bear market. We enter a new uptrend. So what we're looking for over here, and what I've marked out, is we've marked out the point of which, and someone is messaging me a lot right now. Let me just clear that. It's actually Wolves of Crypto. He's actually messaging me on Messenger. But anyway, downward sloping resistance over here. We have our green lines coming across, and the points that I've marked out is the points on which these horizontal levels converge with our diagonal trend line. So we have this little bit of a range, and this date range indicates a point of which either we will be breaking above this diagonal, or if we don't in time, we will be losing that lower low. So by the 21st of October, we will either break above this diagonal and enter a uptrend or a short-term rally, or we're going to be breaking down below this 19,000 level, okay, the 17,600 level, and going for a new potential low. So very interesting, guys. Keep an eye on that one. We'll talk about this chart. As you can see, it's starting to curve upwards a little bit, which is nice to see. Bitcoin dominance. Again, Bitcoin dominance is going to be very telling over here, guys, for Bitcoin. We would really like to see Bitcoin dominance push through this red zone. And of course, if we zoom out, we do have this descending wedge, a macro descending wedge, which of course is bullish for Bitcoin dominance. We had this fake out over here, projected back in, retested those lows, pushed upwards. We're in this horizontal range over here. If we do see a push over here, that would be bullish for Bitcoin. We would like to see a push through. Of course, this is a major rejection zone. The fact that we are still in this rejection zone and have not got rejected yet is a good sign. So that's good to see. Bitcoin dominance is looking good. All right, DXY. DXY is looking bearish. DXY is looking bearish from a technical standpoint. Now, of course, we can't do a standard technical analysis on the DXY, although we have bearish structures, bullish structures, whatever. Sometimes there's a lot of external factors that influence the DXY, and it can ignore technical analysis very easily. So although we have this rising broadening wedge, which is a bearish pattern, we do expect a break or a continuation down. We've been saying this for the last few days, ever since we're up over here. We've said we're going to see a continuation downwards to this level. It can revert at any point. It can continue upwards at any point. It can act opposite to what the TA suggests. But if we're going on a perfect world in a market that doesn't have any external factors, and we do expect this to continue as per the market structure, we will expect this to continue downwards here. And that is just more of a bull case for Bitcoin to continue upwards. Brave New Coin Liquid Index. We can see we have had, and this is probably the one bearish thing here, guys. We've had a monthly close below the macro 9-year uptrending support line. And a lot of people ask me, how significant is this? And it is significant, but it also isn't significant, because the most significant thing on this chart right now isn't this 9-year support line. It is this low created within the 9-year support line. This individual point here is the most significant data point on the chart right now. So as long as we're able to get back above that, everything's fine. It doesn't matter if we close another monthly candle. What matters is we do not close a monthly candle below this green line. If we close a monthly candle below this green line, it is very likely that within that monthly candle, we will head down to 12, 13,000, okay? All right, total cryptocurrency markup is probably the one thing that I am more leaning towards the bear side on than anything else. I do not like the look of this. This is obviously a descending triangle. Descending triangle formation is a bearish pattern. We do expect a breakdown of this trend line at some point. Of course, as altcoins generally move faster than Bitcoin and do make up a significant proportion of the total cryptocurrency markup, it's around 59%. We will see this breakdown before Bitcoin makes new lows, okay? So provided we go down here, provided everything turns down, provided the market goes full bear mode again, okay? If we will be heading to new lows, we will have a warning from the total cryptocurrency markup before we actually do. We should see total cryptocurrency markup break through this 845, 46, 48 billion dollar level before Bitcoin actually loses that previous lower 17,600, okay? That is all I want to talk about today, guys. I hope you enjoyed the video. I hope you found something beneficial there. Look at the short term, keep it on the short term. One more thing I didn't talk about, guys, silly me. We're going to talk about these ranges, these horizontal ranges. If we eliminate everything on the chart, if we just go ahead and just real quickly eliminate these lines, pretend these drawings don't exist, you can see very clearly what is actually happening here for Bitcoin. And I'm just going to go ahead and show you because I think this is really important. If we zoom out, here it is. Here it is. Here is exactly what is going on for Bitcoin. Very interesting. We can get rid of these lines. It is a nice horizontal channel. Okay, horizontal channel right over here. Couple breaks to the top side. Okay, couple breaks to the downside. But more or less, we are in a horizontal channel. Horizontal channels are neutral structures. And this is why we can't be overly bearish here. Think about this. We're in a neutral structure. We're above 19,000 support, major support, okay? We have a lot of bullish indicators on the technicals suggesting the bottom is in, and we can't really be expecting new lows right now until major triggers are broken. So until this major trigger is broken, we have to remain neutral. And by neutral, I mean, we have to have both a plan for the upside on the short term and the upside and the downside on the short term. And we have those plans. We know when this trigger level breaks, that is when we are targeting this level. That is when we're going big short. When this trigger level breaks, that is when we know we need to be entering more longs, okay? Now, because of these two instances here, I will be holding off on directly entering longs straight away. You want to be accumulating your position for longs within this range over here, or potentially within any bullish structures that are happening between this level, like we have done. If you've been following our channel, if you've watched our videos, if you've been in our VIP, you know we've taken numerous longs on these levels to catch these swings. We've almost caught every single one of these swings upwards from longs. We haven't been shorting much. We've been basically just longing these swings upwards, and almost actually every single time we've done it, we've come away with huge profits because it's quite predictable. These ranges are very predictable, which is always good. So looking for a horizontal break of this level here is very bullish. Horizontal break of this downwards here is very bearish. Anything between is more neutral. You have supports and resistance ranges you're looking to add positions in, obviously with low capital. That being said, guys, I hope you enjoyed today's video. We have an altcoin video coming later today. Stick around to listen about Bitget if you do want to support the channel, if you like the content, if you like our style of analysis. Support me, support the channel. It helps a lot, obviously. Head to Bitget, sign up, trade there. It is probably one of the best exchanges I've ever traded on, and you'll find out more about it in a sec. We'll catch you guys tomorrow. So we're going to quickly have a discussion about Bitget. Now, if you follow the channel, if you're on our Telegram, if you're on our Twitter, if you like the content, enjoy the videos, and just find what we do informative and beneficial, go ahead and support the channel by clicking the sign up link to Bitget and trade where I trade. Now, there's about 10 different good reasons why I'm suggesting Bitget, and obviously I've made the swap from Binance to Bitget close to a year ago now. Last year in September, I decided to go to Bitget and trade on Bitget, and I'm going to go through the reasons why you should actually come over and trade on Bitget too. So first and foremost, guys, if you like spot trading, obviously 0% trading fees on spot. They've got over 260 coins here. Basically every popular coin you can think of is on Bitget. Basically all the coins on Binance you can find on Bitget. Another really good thing is it is global access, meaning there's no global restriction on who can sign up. Doesn't matter what country you're in, where you're from, you can sign up to Bitget. And the reason they can do that is because they do no KYC. KYCing on this exchange is completely optional. If you want to trade on a decentralized exchange where you don't have to sign up, you don't have to have your government information in there, this is where you want to be, completely decentralized. Another really good thing is they obviously have very low trading fees for futures. It's around 0.02%. Now they have around 60 to 70 different trading pairs on futures and are adding more every couple of weeks, so it is steadily growing. They also have a security fund, so if the exchange ever gets hacked or you get hacked, you can actually request a refund or a compensation from the exchange. They have, I think it's like $80 million, or if not more, $800 million or something close to that in the security fund that actually pay out to their users if anything catastrophic happens. So obviously signing up the link, you'll get access to all of that, but there's a few beneficial and extra things you get access to if you sign up the link down below. You'll get access to the reward center. Now on the reward center is about 5 separate tasks, and they're trading tasks. If you complete those tasks, you can make up to $4,163 just from actually trading. And the second thing is, if you sign up with the partner link down below, you are actually registered underneath my partner account. And what that gives me availability to do is I can actually adjust your fee kickbacks depending on your trading volume. So you actually get paid to trade on Bitget. You'll get kickbacks based on this trading fees you use. For example, on the 3rd of October to the 10th of October, we are doing a running campaign where 10% of the fees you pay on Bitget, you actually receive as compensation as USDT directly to your account. These are some of the things I can do. I can assess your trades, I can monitor your trades if you need advice, I can actually see what is going on, and obviously the fees are very, very small on Bitget. That being said, guys, that is all I want to talk about Bitget. If you want a more in-depth analysis and video about Bitget or how to leverage trade, go to our channel and click the video how to trade on leverage, and we talk you through Bitget and a little bit more. Thanks guys, we'll see you later. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.